Welcome back to the channel. Today's video is a big one because we're diving into a powerful moment from Warren Buffett at the 2025 Berkshire Hathaway annual meeting, where he took a clear stance on something that's been dividing economists and politicians for years: tariffs and protectionism. In his words, trade should not be a weapon. That's a bold statement, and you're about to see exactly how he breaks it down. I'm going to play the clip for you in just a second, straight from CNBC, and then right after, I'll be giving you my full reaction and detailed breakdown of what Buffett really meant, and why it matters right now more than ever. And stick around, because after the analysis, I'll walk you through 3 no-brainer Buffett-style stocks that I think are worth buying today if you're looking to invest with long-term conviction. So if you only watch one video today, make it this one. Watch all the way to the end, I promise it'll be worth it. Before we jump in, hit that like button. Let's aim for 1,000 likes on this one. Share the video if you find it valuable, drop your thoughts in the comments below, and don't forget to subscribe so you never miss the next important update on investing, market moves, and Warren Buffett insights. Alright, let's roll the clip, and hear what the Oracle of Omaha has to say.
This first question comes from Bill Mitchell. I received more questions about this than any other question. He writes, Warren, in a 2003 Fortune article, you argued for import certificates to limit trade deficits and said these import certificates basically amounted to a tariff. But recently, you called tariffs an act of economic war. Has your view on trade barriers changed, or do you see import certificates as somehow distinct from tariffs?
Yeah, well, the import certificates were distinct, but their goal was to balance imports against exports, and so that the trade deficit would not grow in an enormous way. In fact, it would have, and it had various other provisions in it to help third world countries at that time, as they were called, to perhaps catch up a little bit. And they had a variety of aspects to them, but basically they were designed to balance trade. And I think you can make some very good arguments for the fact that balanced trade is good for the world, and the more balanced trade there is, the better. It will continue to be better for cocoa to be raised in Ghana, and coffee in Colombia, and a few things. And over time, the American industry has gone from being an agricultural country. This was nothing but an ag country. I mean, virtually, and that was only 250 years ago. And we have become a very industrial country, and we did not want to make that a situation, in my view, where we ran greater and greater deficits, building up greater and greater debts against the country. So I designed this import certificate thing, which Charlie thought was a little too much like Rube Goldberg. I don't know whether that name is, but it's gimmicky. But it's certainly a lot better than anything I think than we're talking about now. And there's no question that trade can be an act of war, and I think it's led to bad things. Just the attitudes it's brought out in the United States. I mean, we should be looking to trade with the rest of the world, and we should do what we do best, and they should do what they do best. And I don't think it. That's what we did originally. I mean, we were good at producing tobacco and cotton 250 years ago, and we traded it. And we want a prosperous world with 8 countries with nuclear weapons, including a few that are what I would call quite unstable. I do not think it's a great idea to try and design a world where a few countries say, ha, 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 we've won, and other countries are envious. So my import certificate idea, which went no place, I think we've got extra copies, Rob. With not a great demand for the copies. If anybody did, and if you'd like, and write the office, I think we could probably send you a copy of it. But the main thing to do is not use trade. Should not be a weapon. And the United States, we've won. I mean, we have become an incredibly important country, starting from nothing 250 years ago. There's nothing been anything like it. And it's a big mistake, in my view, when you have 7.5 billion people that don't like you very well, and you got 300 million that are crowing in some way about how well they've done. And I don't think it's right, and I don't think it's wise. I do think that the more prosperous the rest of the world becomes, it won't be at our expense. The more prosperous we'll become, and the safer we'll feel, and your children will feel someday. So that's. But don't expect my import certificate idea to go down there with Adam Smith's Wealth of Nations or anything.
All right, so the question that sparked this whole conversation came from Bill Mitchell, and it's one Buffett admitted got more attention than any other. So clearly this struck a nerve. The question basically pointed out something that seemed contradictory. Back in 2003, Buffett advocated for import certificates in Fortune magazine as a way to manage America's growing trade deficit. But more recently, he's been quoted calling tariffs an act of economic war. So the natural question is, has his view on trade barriers changed, or is he drawing a line between what he proposed and what's being done today? Buffett starts off by clarifying this very thing. Yes, import certificates sound similar to tariffs, but they're not the same thing. The goal behind his proposal was to balance trade, not to punish other countries or gain an unfair advantage. He wasn't trying to start a trade war. He was trying to stabilize the U.S. economy and prevent massive deficits from piling up. He explains that these import certificates were designed to match imports with exports. In other words, you could only import as much as you exported. That way, America wouldn't become dangerously dependent on other countries for goods while building up unsustainable debts. And in typical Buffett fashion, he notes that the idea had other thoughtful provisions too, like helping developing countries at the time, he refers to them as third world countries, get a better footing in global trade. But here's the key part, Buffett isn't dogmatic about it. He actually acknowledges that his plan, while well-intentioned, was a bit complicated. He jokes that his partner Charlie Munger thought it felt too much like a Rube Goldberg machine. You know, those overly complex contraptions that do something simple in a hilariously complicated way. So even Buffett knows it wasn't a perfect solution. But in his view, it was still better than what we're doing now, imposing blunt, retaliatory tariffs that risk alienating other nations. And this is where Buffett shifts gears from technical economics to geopolitical wisdom. He says flat out, trade can be an act of war. Not always, but it can certainly lead to bad outcomes when it's driven by ego, nationalism, and short-term thinking. He makes a point that really stood out to me. The attitudes surrounding trade have gotten worse in the U.S. People now treat it like a zero-sum game. If they win, we must lose. But Buffett doesn't believe that. In fact, he says the exact opposite. He says countries should do what they do best and trade openly. That's how global prosperity spreads. That's how the U.S. became great, by leaning into its strengths and trading with the rest of the world. From an agricultural society 250 years ago to a global industrial power today, it happened because of trade, not in spite of it. Then, Buffett drops a really powerful reminder. The U.S. has won. We started with nothing and built the most prosperous, influential nation in human history. But crowing about that victory, especially in a world with 8 nuclear-armed nations, including some unstable ones, isn't just arrogant, it's dangerous. Think about that for a second. He's warning that if the U.S. continues to frame global trade as a competition we must win, and treats other nations as losers, it could create the kind of resentment that leads to geopolitical instability. In other words, economic policy isn't just about dollars, it's about peace, relationships, and global security. And here's where Buffett reveals his core philosophy. The more prosperous the rest of the world becomes, the more prosperous and safe the U.S. will be. It's not about hoarding wealth, it's about raising everyone's tide. He doesn't believe that a rich China or a thriving Africa or a booming India takes away from America's success. On the contrary, it amplifies it. He wants a world where Americans and non-Americans alike can thrive, because that's how you create peace, longevity, and meaningful global partnerships. At the end, Buffett admits his import certificate idea never took off. He even jokes that they've probably got stacks of it sitting in his office collecting dust. But the point isn't that everyone should adopt his plan. The point is, we need to stop weaponizing trade. It's not about winning, it's about building a world where everyone wins. So what can we take away from all this? Warren Buffett isn't just giving us economic theory, he's offering a worldview, one where prosperity is shared, where trade builds bridges instead of burning them, and where America leads by example instead of intimidation. Whether or not you agree with his import certificate idea, the bigger message is clear. In an increasingly interconnected and fragile world, cooperation beats confrontation. And if we can trade with that mindset, we'll not only boost our economy, we'll help build a safer, more stable planet for future generations. Thanks for sticking around for the full breakdown. Let me know in the comments what you think about Buffett's stance on trade, and whether you think policies like tariffs are helping or hurting us in the long run. If you found this video insightful, give it a thumbs up and don't forget to subscribe for more deep dives like this. Now, I'm going to break down exactly why Warren Buffett is so bullish on these companies and more importantly, why you should be too. We're talking about a leader in innovation that's changing the way we live, work, and play. We're diving deep into a pioneer in financial services with a global reach and a rock-solid reputation, and we're exploring a giant in the energy sector that's poised for massive growth in the years to come. First up, we're talking about Apple, ticker symbol AAPL, the tech giant that has revolutionized the way we communicate, work, and entertain ourselves. The iPhone, the MacBooks, the Apple Watch, they're everywhere. These devices have become integral parts of our daily lives, seamlessly blending into our routines. But here's the thing, Apple is more than just gadgets. It's an ecosystem that connects all these devices, creating a seamless user experience that is hard to match. It's a lifestyle brand, a symbol of innovation, and a money-making machine. Warren Buffett gets this. He sees Apple not just as a tech company, but as a brand that has redefined consumer expectations. He understands the power of a loyal customer base, and Apple has one of the most devoted followings in the world. This loyalty is not just about the products, but the entire experience Apple offers. Think about it. People wait in line for hours, sometimes even days, to get their hands on the latest iPhone. This kind of dedication is rare and speaks volumes about the brand's influence. They shell out hundreds of dollars for AirPods, Apple Watches, and all the other gadgets that seamlessly integrate into the Apple ecosystem. This integration is a key factor in Apple's success. That's brand loyalty on another level, and it translates into serious revenue for Apple. The company's financial performance is a testament to its strong market position and customer loyalty. But here's the kicker. Despite its massive size and global dominance, Apple still has room to grow. The tech landscape is ever evolving, and Apple is always at the forefront of this evolution. They're constantly innovating, pushing the boundaries of what's possible with technology. From hardware to software, Apple is always looking for the next big thing. From augmented reality to self-driving cars, Apple is at the forefront of the next wave of tech disruption. These innovations could redefine entire industries and create new opportunities for growth. And that, my friends, is why Warren Buffett is betting big on Apple. He sees the potential for continued innovation and growth, which makes Apple a compelling investment. He sees the long-term potential, the continued innovation, and the unwavering customer loyalty. These factors combined make Apple a unique and valuable company. And you know what? He's right. Apple's track record speaks for itself, and its future looks just as promising. With a staggering market cap of $2.96 trillion, Apple remains one of the most dominant and profitable companies in the world. In 2024 alone, the company generated a massive $391.04 billion in revenue, with an impressive net income of $93.74 billion. That translates to an earnings per share of $6.43 and a price-to-earnings ratio of 30.88. While its dividend yield sits at a modest 0.38%, Apple's consistent cash flow, brand strength, and ecosystem lock-in make it a cornerstone for any long-term portfolio. Buffett has called Apple not just a stock, but a consumer product company with deep loyalty, and the numbers clearly back that up. Now, some people might say Apple's stock is already so expensive. They wonder if it's too late to invest in such a high-priced stock. Isn't it too late to buy in? And to that I say, not necessarily. The stock price reflects the company's current value, but it doesn't account for future growth. Look, I get it. Apple's stock price isn't exactly cheap. But when you consider the company's potential for future growth, it might still be a good investment. But remember, we're playing the long game here. Investing in Apple is about looking at the bigger picture and the long-term potential. We're not looking for a quick flip, we're looking for solid, long-term growth. This is where Apple's consistent performance and innovation come into play. We're looking for solid, long-term growth. And Apple has a history of delivering just that. Its consistent performance over the years is a strong indicator of its future potential, and Apple has a history of delivering just that. The company's ability to innovate and adapt has kept it at the top of the tech industry for years. Plus, even with its high price tag, Apple's stock is actually trading at a discount compared to its earnings potential. This means there's still value to be found in investing in Apple. That means there's still room for the stock to climb even higher. As Apple continues to innovate and grow, its stock price is likely to follow suit. So, if you're looking for a stock that's a proven winner, a leader in its industry, and a solid bet for the future, Apple is definitely worth considering. Its track record, innovation, and loyal customer base make it a compelling choice for any investor. Next up, let's talk about a company that's synonymous with luxury, prestige, and financial power. American Express, ticker symbol AXP. Now I know what you're thinking. Credit cards? Really? But hear me out. American Express isn't your average credit card company. They're in a league of their own. They cater to a higher-end clientele, people who value premium rewards, exceptional customer service, and exclusive experiences. And that focus on the affluent has been a winning formula for American Express for decades. They've built a brand that's synonymous with quality, exclusivity, and trust. And in the world of finance, trust is everything. But American Express isn't resting on its laurels. They're constantly innovating, adapting to the changing financial landscape, and finding new ways to attract and retain customers. They're investing heavily in digital technologies, expanding their global footprint, and forging strategic partnerships to stay ahead of the curve. And that's why Warren Buffett loves American Express. He sees a company that's built to last, a company that understands its customers, and a company that's not afraid to evolve. Now, let's talk about why American Express is a smart buy right now. The financial sector is going through some interesting times, to say the least. But amidst all the uncertainty, American Express stands out as a beacon of stability. They have a strong balance sheet, a diversified revenue stream, and a proven track record of weathering economic storms. Plus, with interest rates on the rise, American Express is well positioned to benefit from increased spending and higher interest income. With a market cap of $199.32 billion, Amex continues to thrive in the financial services sector. In 2024, the company reported $74.2 billion in revenue and $10.13 billion in net income. Its earnings per share came in at $14.28, and the stock currently trades at a P/E ratio of 19.92, relatively attractive when compared to the broader market. Investors also enjoy a dividend yield of 1.03%. Amex benefits from a strong brand, affluent customer base, and a business model that leans heavily into recurring revenue from both consumers and merchants. It's the kind of durable, cash-generating business Buffett loves to hold for decades. So if you're looking for a stock that offers a blend of stability, growth potential, and a touch of luxury, American Express is definitely worth a closer look. Their commitment to excellence is evident in every aspect of their business. From their top-tier customer service to their innovative financial products, American Express continues to set the standard in the industry. They understand that in today's fast-paced world, convenience and reliability are paramount. That's why they offer a range of digital solutions that make managing finances easier than ever. Whether it's through their mobile app, online services, or customer support, American Express ensures that their clients have the tools they need to succeed. And let's not forget their strategic vision. American Express is always looking ahead, anticipating market trends and positioning themselves to capitalize on new opportunities. Their ability to innovate and adapt is what keeps them at the forefront of the financial industry. So when you think of American Express, think of a company that's not just keeping up with the times, but leading the way. Finally, let's talk about a company that's tackling one of the biggest challenges of our time: the transition to clean energy. This is a monumental task that requires innovation, dedication, and a willingness to adapt to new realities. And one company that's stepping up to the plate in a big way is Occidental Petroleum, ticker symbol OXY. I'm talking about Occidental Petroleum, a giant in the energy sector that's making bold moves to reduce its carbon footprint and embrace a more sustainable future. This isn't just about staying relevant, it's about leading the charge in an industry that's undergoing a seismic shift. Now I know what you're thinking. Oil and gas? How can a company rooted in fossil fuels be a leader in clean energy? Isn't that, like, the opposite of clean energy? And you're not wrong. The oil and gas industry has long been associated with environmental degradation and high carbon emissions. But here's the thing, the world is going to need oil and gas for decades to come, even as we transition to renewable sources. The reality is that our current infrastructure and energy demands can't be met by renewables alone, at least not yet. And Occidental Petroleum understands this. They recognize the importance of balancing current energy needs with future sustainability goals. They're not trying to fight the inevitable. They're embracing it. By integrating sustainable practices into their core operations, they're setting a new standard for the industry. They're investing heavily in carbon capture technologies, renewable energy projects, and other initiatives to reduce their environmental impact. These investments are not just about compliance, they're about innovation and leadership, and other initiatives to reduce their environmental impact. This multifaceted approach ensures that they are not just reducing emissions but also contributing to the development of new, cleaner technologies. In fact, Occidental Petroleum has set an ambitious goal of becoming a net zero emissions company by 2050. That's right, net zero. This is a bold commitment that requires a comprehensive strategy and unwavering dedication. They're not just talking the talk, they're walking the walk. From executive leadership to on-the-ground operations, every level of the company is aligned with this vision. And that's why Warren Buffett is bullish on Occidental Petroleum. When one of the world's most respected investors puts his faith in a company, it's worth paying attention. He sees a company that's adapting to the changing energy landscape, a company that's not afraid to innovate and evolve, a company that's committed to sustainability, and one that understands the importance of long-term planning and responsible stewardship, and a company that's well-positioned for long-term growth. This isn't just about surviving the transition, it's about thriving in a new energy paradigm. Now let's talk about why Occidental Petroleum is a smart buy right now. With their forward-thinking approach and robust business model, they offer a unique investment opportunity. The energy sector is notoriously volatile, with fluctuating oil prices and unpredictable market dynamics. But Occidental Petroleum has a few things going for it. Their strategic investments and diversified portfolio make them resilient. First, they have a strong track record of profitability, consistently delivering solid financial results, even during times of low oil and gas prices. This resilience is a testament to their effective management and strategic foresight. Second, they're diversified across multiple energy sources, including renewables, which provides some insulation from fluctuations in any one market. This diversification strategy helps stabilize their revenue streams and manage risks more effectively. And third, they're at the forefront of the clean energy transition, which gives them a competitive advantage in a rapidly changing industry. Their proactive approach positions them as leaders rather than followers, which gives them a competitive advantage in a rapidly changing industry. Their innovative solutions and commitment to sustainability set them apart. With a market cap of $41.49 billion, Occidental posted $26.73 billion in revenue for 2024 and delivered a net income of $3.06 billion. Its earnings per share is $2.26, and the stock currently trades at a P/E ratio of 16.09. More notably, the dividend yield stands at 2.13%, offering shareholders solid income in addition to potential upside. Buffett has been steadily increasing his stake in Occidental, a move that suggests confidence in the company's long-term role in global energy, especially as oil prices continue to see structural support. So if you're looking for a stock that offers exposure to the energy sector, a commitment to sustainability, and the potential for long-term growth, Occidental Petroleum is definitely worth considering. Their unique position in the market makes them a compelling choice for forward-thinking investors. Occidental Petroleum is definitely worth considering. Their unique position in the market makes them a compelling choice for forward-thinking investors. Each of these companies, whether it's a tech titan, a financial powerhouse, or an energy player, fits the mold of what Buffett looks for: strong fundamentals, dependable earnings, and long-term competitive advantages. If you're enjoying these stock tips and you're ready to level up your investing skills, I've got something game-changing for you. I've just launched my Value Stocks Investing Master Course, designed to teach you the exact principles used by investing legends like Warren Buffett and Benjamin Graham. But this isn't just theory. You'll learn how to spot undervalued companies using real-world metrics, build a high-quality portfolio, and protect your investments, no matter what the market throws at you. Whether you're just starting out or want to sharpen your strategy, this course gives you the tools and confidence to grow real, long-term wealth. It's packed with step-by-step lessons, powerful insights, and practical strategies you won't find anywhere else. So if you're serious about investing smarter and building a future you're proud of, click the link in the description and pinned comment to join today. Trust me, your future self will thank you. If you want exclusive stock tips, in-depth analysis, real-time trade alerts, and free investing guides, join the Stocks Galore Patreon today and take your investing game to the next level. Our members there get full in-depth analysis on most of these stocks I mention here. Head over to patreon.com/stocksgalore and become part of our growing community of smart investors. Link is in the description. Now, I want to hear from you. Which of these Warren Buffett stocks are you most bullish on? Are you adding any of them to your portfolio? Let me know in the comments below. Like, Share your thoughts in the comments and subscribe to the YouTube channel. Catch you in the next one.